Coming up tonight on Business Live, we shall be finding out the impact of the exit of multinational companies from Ghana on the country's job market. We'll be discussing the issue with financial economist Professor Lord Mensah. Also in this bulletin, President Akufo-Addo promises to work with Parliament to pass new labor law currently before the House to resolve labor disputes and improve well-being of workers. Meanwhile, TUC once again bemoaned the low wages paid workers.
Increases we negotiated for workers in the last 2 years have lost their real values. So, comrades, we have a lot of work to do to protect the working people of Ghana.
Plus, on the Joy Business Van, we shall tell you the story of beauty startup Bubune Africa, which uses authentic African ingredients to make skincare products. Details of these and many others lined up for you. Please stay. Thanks so much for your time. I am Pius Kojo Baka. So our very first story, the precarious economic environment in Ghana spanning 2022 to date has compelled many multinational companies to relocate all or part of their business to other countries. The latest to announce the closure of its operations in Ghana is food delivery giant in Africa, Glovo. The Spanish firm announced this week that it will be exiting the Ghanaian market on May 10, citing profitability challenges and reassessment of investment portfolios. More in this report.
The multinational firms, particularly in the consumer space, have cited high cost of borrowing, astronomical taxes, elevated inflation, and perennial exchange rate depreciation as the major reasons for their exit. This decision will not only affect the many jobs created by the firm for the young and ordinary Ghanaians, but also its contribution to the gross domestic product of the country. The companies are Glovo, Unilever Ghana, Jumia, Game, Nivea, as well as Dark and Lovely. Their departure will obviously impact negatively on job creation, tax revenue to the state, and ultimately economic growth.
All right, so let's interrogate this further. Let's go on Zoom and engage economist Professor Lord Mensah on this issue. Thanks so much, Professor Mensah, and a happy May Day to you. Now, is it too late for government to intervene in the case of Glovo to reconsider its operations in Ghana?
Our viewers, you see, it's not about government intervention. It's about the economic performance. If you have a country where, your cost of borrowing is so high, you have a country where your taxes are going up, you have a country where your inflation is up there, and then talking about, perennial upwards adjustment in our exchange rate. Clearly, it tells you that things are not good. And any multinational which is operating in an environment like this may want to relocate. And it's not Glovo alone. If you take Unilever, they had a tea, production part of Unilever. They have relocated to, Nigeria as we speak now. So it tells you that things are not going on well. Now let's take, the impact of exchange rate. I mean, these businesses are bringing foreign exchange rate. At the end of the day, when they operate in the environment, they're going to generate, whatever revenue in cities. And so if they look into the future and they are not certain on the likelihood of exchanging the cedi to the dollar, obviously they may have to advise themselves. So these are all things that tells you that things are not okay. Every economy that is in balance of payment crisis, i.e. a situation where your dollar reserves reduces, multinationals start moving away. And that is what we call, the point where you come to realize that businesses are not really certain in your environment as they operate. So it's not about government convincing them or government intervention here and there. But then just make sure that your economic indicators turns up to be friendly. You'll get them back to operate in your economy. So it has to do with the economic situation. And once you see businesses moving out of your country, it tells you that your economy has been grounded. And if you take our exchange rate, you see, now we're managing the exchange rate with expectations. I mean, expectations from the IMF money. There's no hope anywhere. And so if you're a business and, exchange rate is being managed with expectations, then the uncertainties get so high. And as a result of that, you will be advising yourself, you may want to move to, if there's a neighboring country or there's a place where you'll be sure of the exchange rate. So that is what is causing, these businesses to move away.
All right, so you have the firm conviction that really is about the unfriendly nature of the economic environment. But in your assessment, I should ask you this, will be the impact of this development on jobs in this area?
Of course, business, when they are operating, they engage hands. And once they engage hands, you should expect that more jobs will be created. But as they are living, obviously, they will live, and then those, jobs, more gaps will be created in the job market. And already, our unemployment situation is somehow, precarious. And as a result of that, if we see these businesses going out, we're going to see more unemployment, in the environment.
And I want to know this. Do you agree that these companies could just not be surviving due to the kind of business models really they run, since other companies are still operating in Ghana regardless of the challenges you're talking about?
Well, it depends on the component or the type of business they are running. I don't know what you mean by business model, but if you're a multinational and you're operating an environment where you are not certain of the country's currency, obviously, you'll be advising yourself. So these are things that happens, and they are all signals of economy that is not doing well. Let me put it blunt out there. Yes.
I thought some point in time we were told that the economy is improving and all what have you. So if now we are seeing
economy may be improving. You see, when you get a message from IMF telling you that the economy has improved, we need to ask questions about the reference point that they are using to determine the improvement. If they pick a reference point of last year, there's an improvement as we speak now, because last year we're doing inflation of 54%.
Exactly.
Now it has come down. It does not mean that there's no inflation. Exchange rate is still going up. We thought it was the first quarter pressures that sends the exchange rate up, sending the exchange rate up. But it has gone beyond that. And what is happening now is what we call, in economics, we call something self-fulfilling, crisis. And the self-fulfilling crisis has to do with the expectations of people on the exchange rate. And if it turns up that it does not fall within what they're expecting, they tend to act on the market, and the rate will start going up again. So the expectations has been on the IMF money. And once there's a signal that we're not certain on when the IMF is going to approve the next release, then it becomes, a problem. So we've moved from, balance of payment crisis, and now we are in a situation, what we call, self-fulfilling, crisis.
What can government do really to reassure businesses that are in Ghana as we speak, basically convincing them that, well, Ghana is still the best place to do business despite these challenges?
I think convincing may not be the right thing to do. You cannot just go out there and be convincing businesses on
But at least it's making an effort, isn't it?
Well, we have to look at the hard numbers. What is happening in the country? What is the next level of the exchange rate? What is the next level of inflation? What can the government do with reduction in taxes? Those are the things we may have to look at. If you want to run an economy in the situation we find ourselves in, it won't be something difficult to do, because at the point where we find ourselves, the currency depreciated so high, you're going to get consumers moving away from, foreign, product to local product. Provided you have substitute, of what they are consuming, from the foreign, inflow. So effectively, we don't have that production. So what we have to do is we may have to tone down, our, expenditure. That is what we're supposed to do. But, politically, we don't seem to be moving towards that direction. And that is the problem we have. And it has been like that for the past, years that we've been to IMF. You see, we want to spend. But at the end of the day, cutting down your expenditure one way or the other is an indirect way of generating revenue. And that is what, our economic managers are not looking at. And because under normal circumstances, when your currency is depreciating, that's the point where you have to make sure you increase production. And when you increase production, it tends to fall on local produce, and people will consume the local product because foreign products are expensive to consume now. But that is not the case with Ghana as we speak, because we were spending, but we're not spending into targeted areas. Let me give you a typical example. When you talk about rice, right? If we were to roll out a policy that is just targeting only rice, do you know, and we freeze importation on rice, do you know how we can save the exchange rate? We're going to save the exchange rate by a huge margin, So effectively, we have to be targeting our production. And we shouldn't look at where the money will be coming from if we're pumping it into areas that is targeted to bring in production that will increase consumption in the country.
And looking at how things are going, do you foresee more multinationals leaving the country? Or, I don't know.
Oh, yes. If it continues in the same trajectory, it's likely to happen because, as a multinational, you may have to pay to your shareholders out there. And what do you pay them? You pay dollars. So you cannot generate your revenue in cedis, and at the point where you have to return to your shareholders, you're returning something small. In some cases, you may have to sacrifice your reserve. And no multinational would like to contain that.
Thanks so much, Professor Lord Mess. I'm grateful speaking to us on Business Life. We appreciate your thoughts. Now, President Akufo-Addo has assured organized labor that the executive will work closely with the legislature to pass the new labor law this year before his tenure ends. The president is hopeful the law will help address labor disputes and set fair and appropriate wages for workers. President Akufo-Addo was addressing workers at this year's May Day celebration.
The upward adjustment of the base pay by 23% in the first half of the year and by 25% in the second half of the year is a demonstration of government's commitment to improving and protecting public sector incomes. This is being done to signal the importance government places on the welfare of workers. Chairperson, Secretary General, though today marks my final day, my final May Day address to organize labor as President of the Republic, having served by January the 7th, 2025, the constitutionally permitted allotment of 2 terms of 4 years each, I want to assure you that this, however, will not be my last encounter with organized labor.
Meanwhile, the Secretary General of the Trades Union Congress, Dr. Anthony Yauban, has once again bemoaned the low wages paid workers, particularly workers in the private sector. This, he says, translates into small pension benefits when workers go on retirement.
Comrades, we are celebrating this May Day at the time Ghanaian workers and their families are grappling with high cost of living and inflation of over 25%. Exchange rate of the cedi is now almost 14 cedis, if not more, to $1, compared to about 4 in 2016. That means workers who earned monthly salary of 1,000 Ghana cedis in 2016 were taking home the equivalent of $250. Today, 1,000 Ghana cedis is only $71 US. The depreciation of the cedi at this monumental scale, that is about 250% depreciation, represents a huge decline in living standards of Ghanaians generally and workers in particular. This is so because of our over-reliance on imported goods such as medicines, refined petroleum products, and food, whose prices are directly affected by the exchange rate of the Ghana cedi in terms of the major international currencies such as the US dollar and the pound sterling. What it means is that if we want our cities to be stable, we should reduce imports and consume what we produce in Ghana. Furthermore, as we all know very well, Ghanaian workers rely on loans to meet very basic necessities such as rent advance and our children's education. And in some cases, we even have to rely on loans for food. Today, we are paying interest rates of 30% to access loans from the banks. In the informal economy, interest rates can even be as high as 50% or even sometimes higher. Our children graduate from the universities and colleges after we have spent so much on them.
Dr. Anthony Yauba, General Secretary of TUC. Still watching Business Live. We'll be right back with the Joy Business Fund. Now, Glyco Capital has launched the Glyco Fixed Income Fund. The Glyco Fixed Income Fund is an open-ended mutual fund that focuses on highly liquid assets with an initial offering of 400,000 shares at 0.50 cedis per share and a minimum investment of 100 shares equivalent to 50 cedis. According to the Managing Director of Glyco Capital, Anthony Buedu, the move by the company is to ensure innovation within the investment space. He spoke to Joy Business at the launch.
The Glyco Fixed Income Fund seeks to maximize short-term income while ensuring immediate liquidity by investing in a diversified portfolio of fixed income securities. The fund is an open-ended fixed income mutual fund which invests primarily in highly liquid assets.
We have to go through about 2 years to get this fund registered. And as a fund manager, it's a clean and a new fund. Yes, we know we've had issues in the past. And that's why for this very fund, we will ensure that we have a portfolio that is well diversified to ensure that when there's any issue, our investors will have the kind of liquidity and the support they need anytime they want to withdraw from this fund. Yes, we've had issues in the past, but this fund has been structured in a way that there are controls and we do proper credit and risk assessment before we do our placement, to ensure that the customers or the wherever we do our investment, the right risk assessments has been done, and we ensure and get the right controls in place to ensure that when the funds matures, they are able to repay us.
Deputy Director General in charge of legal at the Securities and Exchange Commission, Deborah Mausia Jimfra, reiterated the need for more sensitization program for investors.
Mutual funds are a potent tool in this endeavor, offering a pathway to wealth accumulation accessible to individuals from all financial backgrounds. That's why the 50 pesos is very interesting, all financial backgrounds. As we navigate this dynamic landscape, embracing the potential of mutual funds can empower us to seize opportunities and to safeguard our financial future. The Securities and Exchange Commission is a strong advocate for financial inclusion and recognizes the transformative potential of collective investment schemes. These schemes provide a diversified platform that empowers both retail and institutional investors to build wealth and financial security.
Additional shares in the fund will be created and purchased on demand by investors on an ongoing basis. The price of these shares will be computed according to various offer prospectus. All investment income earned will be reinvested in the fund.
Thanks so much for watching Business Live. I am Pius Kojo Baka.